All right. Well, thank you everyone for joining us on What Can You Do Right Now, our weekly workshop where we are helping you get relevant, practical information that you can apply in your business right now. Last week, we covered how to increase brand awareness from the comfort of your own home through social media. And if you missed that, we can definitely share that recording with you. Today, we have George Varela, owner of Pacific All Risk Insurance Brokers, here with us. George specializes in helping companies create and implement group benefits plans that fit their employees and also fit their budgets. So today he's going to share some simple ways that you can save money while keeping your employees covered. And I'm going to kick it over to you, George.
Okay, great. So as Anna mentioned, I'm an independent insurance broker. And what that means is I can work with all the available carriers in California to help my clients. And today what I wanted to talk about is reformulating that benefits plan. So usually what does that mean? In most cases, people have an open enrollment once a year. The employees enroll in that benefits plan, and then that's what they have for the rest of the year. But in cases of emergencies, you can change the plan to meet those needs of the employees or the owners. Like I said, in an emergency, and right now would be considered an emergency. So this is a good time to kind of review and reformulate a benefits plan for a business. So then when we talk about reformulating, we consider what type of benefits that we need to look at. And nowadays it's a good time to have those questions like telemedicine. Is it available now? And what kind is it? Is it a nurse on call? That's kind of the traditional one. Now there are doctors on call. Can they give you a prescription or not? And finally, like now they're incorporating video calls. So I know my whole medical group is doing video calls to determine whether you should actually show up somewhere. The next type of benefit it's kind of usually down the totem pole. It's a small little checklist, which is the short-term disability insurance. So you go through all of your health, dental, vision, and there's group life and group short-term disability, long-term disability. So that short-term disability is important because if someone does get sick with the COVID, they could be out for up to a month just because they may be fine, but they may not be allowed to come back to work after a quarantine period. So that short-term disability will kick in some money while they're not working. And next is the one that's kind of overlooked is networks. What kind of networks we have. So I'll talk about that more in a second. But traditionally there are kind of small networks and then large networks. And those are the providers and the hospitals that you have access to. So in the past, Kaiser used to be considered a limited network. Now they're kind of a medium network. So if you'll go jump to the next one, I'll talk about that. So then there's the other consideration, HMO versus PPO. What does that mean? Usually it's determining who your providers are and gives you more choice. So then that's cost benefit consideration. For the employer, there's also a basis plan. So somebody may say, well, I'm going to match part of option A, and then you can choose option A, B, C, and D. For small businesses, they have a lot of flexibility as to how much they can contribute. So it could be $100, it could be 100% of everything. And I've seen all the range. So that's a budget consideration also. So next, Anna was mentioning I'm kind of nerdy, so I have a lot of drawings. So in my, kind of doing my homework, you can see, can everyone see the drawing? I hope so. The chart. So the little black dots are kind of the line of benefits, your cost benefit decision matrix there. So usually you choose along that line of benefits. Hi, Eric.
Hey, George.
So along that line, those are your choice of costs and benefits. So kind of on the low end, you have the bronze. You can see the red dot is the bronze limited network. So it's kind of a small circle because you have less choice of doctors and you have low benefits. So then on the high end, you have that purple platinum plan, which is like you go to the doctor, you pay $5. You can see any doctor you want in California. So that's kind of the bigger circle. That's the size of the network. You have a lot of options. So usually when you're choosing a plan or the business owner's having to make that decision, you choose along the line there. What's happened lately is one carrier came out a couple of years ago and they said, you know what, we're going to go off the line. So that first gold, silver, EPO, HMO came out, the green one with the arrow on it, and they kind of shifted left. So they give you better benefits at a lower price. So that was fantastic. So a few years ago, we started kind of shifting our clients and giving them that option, and people are taking it and saving money. So the following years, a couple other companies said, oh, yeah, we want to get in on that too. So then they got followed by those other two options there. And so those are kind of with our regional networks. So in Southern California, we have a lot of choices. So when it comes to choosing the network, they can kind of pick and choose the doctor group, the hospital group. So if you look at the red circle, that might not include your Newport Beach Hospital, Hoag, but that might be Anaheim Medical Center. So you kind of have a limited network of hospitals. And then the purple one would be like, hey, you can go to any hospital, any doctor you want. Well, the green ones are kind of doing a limited selection of good networks. So some of the green ones have Hoag, have Mission, St. Jude, St. Joe. So those are all the hospitals in Orange County we probably use anyway, but it's still kind of a smaller network. So it's kind of a good compromise where, hey, we're going to save a little bit of money, still see the doctors we would see anyway, and get a good benefit plan. Okay, so we'll go to the next one. So just a couple of examples of people I've helped with those changes. So one of my groups is out in Studio City, and all we did is we made that kind of adjustment. We adjusted to the green option. We still gave them a choice of 5 plans. So we scaled it so if the employee really needs good benefits, they could choose that purple option. A lot of them went to the green option. And just by offering more options, during that employee enrollment process, I talked to almost all the employees. A couple of them just make their decision on their own. But I kind of helped guide them to their plan that works for them. And we're able to save that group about $54,000 starting now for the rest of the year. So it's about $4,500 a month just by kind of opening up the range of options to kind of lean towards those medium-sized network plans. The other example is my Huntington Beach client. They had Kaiser for years and years, and they were fine with it. But because they're in Orange County, there are a lot of other providers out there. So all we did is we offered a couple of new options and allowed some of those employees that maybe they didn't want Kaiser, or they had their doctor that they've been going to and they kind of lost them, to go back and choose that, again, that green medium-sized network plan. And that allowed them to get the doctor they want and save money. So that one is not as much savings, but it's still great, about $1,800 a month or $21,000 a year. It seems like a lot, but it just adds up a couple $100 per employee. And the reason I wanted to talk about that now is when something like this happens, this is a good time to take action and say, well, can the company save a little bit of money? Can the employees save a little bit of money on their benefits plan? And can we stretch our dollars? So that's my goal, is to help people stretch their dollars without hurting their coverage. I don't want anyone to lose benefits. If they have that platinum plan and they have a wide open network, low cost when they go see the doctor, and their company's doing okay right now, probably don't need to look at a lot of changes. But if they're thinking about, well, you know, I do need to start cutting costs, how can I do that without hurting my employees? This could be a good way to do that as well. Do I have another slide? No, questions? I feel like I spoke really fast. I'm sorry about that. I talk about this.
I
Sorry.
have a question. Sorry. What do you mean by like a regional network? And what do you mean by like network choices? Like, how do you know what your choices actually are?
Yeah, so that's a really tough question that usually I help answer. So when it comes to between PPO and HMO, PPO plans allow you to choose a lot of doctors within the network. So that's why I kind of gave it that bigger circle. So that would include most providers in Orange County. So when it comes to HMO, you can still have that big group of providers, but now what insurance companies are doing to lower cost is saying, well, we're going to shrink the available doctors and hospitals that you use because they cost us, they agreed to charge less to the insurance company, is how that works. So some of them are really small networks, some of them are really big networks, and that kind of helps vary the cost. But those medium-sized networks, and I kind of already mentioned that, they allow you to see those common providers in Orange County, the medical groups and the hospitals that are pretty decent at a lower cost. Did that answer the question?
Yeah, definitely.
Oh, okay, thanks.
Awesome. Any other questions? Amy?
So is there a limited number of plans that business owners can offer their employees? And also, what is the ideal number of options to give to your employees so they're not overwhelmed, but they still have choices?
That's a good question. Actually, when I started just over 10 years ago, there are hundreds of plans. And when I first started, I actually showed one of my clients all the plans, and it just blew their mind because there are too many choices out there. So usually what I do is I'll do an interview and ask a lot of questions. Then I kind of filter it down to the right plans, and then I look at cost comparisons. So when you're offering it to the employees, you really want to offer no more than 5 options because you have different levels, and then HMO and PPO. After 5, you start to go a little crazy on how to choose. And then within those 5, I help the client choose. Like I said, I do the enrollment with employees either on the phone or video or in person, used to be. So I would go in and sit down in the break room and hang out for a half a day and kind of see all the employees for 10 minutes each and help them choose their plan. The most recent one, I think we opened up 7 plans just because a couple extras really hit the sweet spot for those few employees. But usually 2 to 3 is the minimum that I'll offer, because then you kind of go low, medium, high, and then the employee chooses the one that's right for them this year.
Awesome. Thanks, Amy. Any other questions?
So
I
then
have
if they change it, oh, sorry.
No, you're
Sorry,
good.
I couldn't raise my hand because I don't have my video on.
No worries. Go ahead, Vicki.
So when they choose it, then they're locked in that plan for the whole year, or how does that work?
Yeah, so traditionally, a company will do an open enrollment period once for the year. Then the employee is choosing that plan for the year, but like the company can actually choose to change the plan every first of the month. So if I'm worried about my overhead costs right now and I'm paying that $9,000 a month and it's hurting me to do that, I can talk to the employees and say, hey guys, we're going to modify our plan starting June 1st, moving forward, so that we all keep insurance and we lower our cost. We might need to tweak it a little bit, but this is going to be able to keep us going for a little bit longer. So the company can choose to change the plan anytime during the year. The employee kind of has to follow the company. So usually the employee's choice is for the year.
So when the employer switches the plans, do they also need to change it to a different carrier, or they stay with the same carrier? How does that work?
Yes, so it depends. So there are a couple of carriers. Well, there's one carrier that's kind of an aggregator of all different plans. So they're kind of the exception, but usually you would change carriers. So if I'm with Blue Shield and I need to make a change, we may go to a different company. So it could be Oscar, Blue Cross, Health Net, or someone else, United Healthcare.
I have a
I
question,
have a-
George.
Oh, go ahead. Go ahead, Eric.
How long does this typically take from contact time of the employee, of the client, if you will, referral, to actually having their staff members, their employees be insured on a group plan? Like, what is that lead? Like, how long does that normally take?
Yeah, so it's usually, my process is talking to the owners, figuring out what they're up to, what do they have now, what's problem we're trying to solve. So usually there's budget in there and sometimes benefits. So I had a client that chose a really low cost plan, and then all the employees revolted a month later because they were really mad. So we changed their plan. That one was really quick. And so conversation, some options back to the employer, we choose the options. We could go out to the employees within 2 days and have it, as long as they're available, we can have it knocked out in 4 or 5 days. And then the change will take effect in the first of the month. So the insurance companies use the first. That's kind of how they manage the plans. There isn't one that starts in the middle of the month usually. It can be fast. It depends.
Nice sign language. I saw that, Eric. That's impressive. I have a question in the chat from John. He asked, you covered health insurance, so what about everything else?
Oh, okay. Good question. So, like I mentioned earlier, usually like the short-term disability gets overlooked. But usually when we offer a benefits plan, we try to make it comprehensive. The health is the big one, so that's the really expensive thing that could hurt us and makes a lot of people go bankrupt. But we also help decide on the dental plan, the vision. I usually recommend a group life insurance policy for all the employees. It's really low cost and it provides a minimal benefit in case something does happen. Short-term disability is available. And then we offer a lot of group discounted plans, like travel insurance is going to be important moving forward, travel medical insurance. We even have pet medical insurance. You see a lot of people spending some really serious money on their pets, and they might want a little insurance plan for them as well. So there are a lot of different benefits that I have access to. It just depends on that conversation. So I don't want the conversation to take a week. I try to make it a little bit simpler. So it just depends.
Awesome. Well, I have a question, and unless anyone else has some that they want to hop in with.
I'll wait till you're done.
No. Go ahead, Amy. I'll ask after.
Okay, so when the employer makes a decision they do want to offer insurance, is there a minimum amount that they need to provide to the employees?
Yeah, so when it comes to the state requirements, one of them is you need to be fair. So you can't say, I'm going to give Jacqueline $500 towards her benefits, but Eric, you only get $100. That's not fair. Unless Jacqueline is an executive and Eric is her employer, her employee, then there's kind of a different job description breakdown. But usually you want to be equal. The minimum is $100 per employee per month. So that's usually the minimum. And then, like I said, it's really flexible for employers. So if it's a family business and it's like mother, father, brother, sister, they could pay 100% of it if they want to. Sorry, Eric.
Cool. Well, I had a question for you, George, that if we did not have a group plan before, how do we start? And also how would I go about kind of figuring out what our employees were looking for? Kind of what does that process look like if you didn't already have a plan in place?
Yeah, so usually when I get that question, I have never had a plan and I'm thinking about it. There's probably been some discussion around the office between the owners and managers and the employees that are working there. Usually it's like, hey, I need insurance, please help me. So usually we figure out, okay, so do we have a budget for this? And I give them that conversation. We can start from $100 to up, right? If they think that's reasonable, it's kind of the same process of figuring out what the employees want. So we could actually do a preliminary survey to the employees and say, do you have insurance? What, I think I already have it in place. Do you have insurance? What kind do you have? If you're going to have access to insurance plan, what will you be looking for? And that helps me and the owners narrow down, okay, here are the choices that we want to make for the employees. And then usually there's a consideration for the business owner, like, okay, this is what we're looking for personally. And we can offer something that kind of solves all those needs. Did I answer your question?
Yes.
Okay.
I
Awesome.
have a question, George.
Yes, ma'am.
Does Oscar have a dental plan? I was asked that before in my office.
Yeah, right now Oscar doesn't offer a dental plan, but I'm contracted with all the other providers, so we can have access to all the other ones that you're familiar with. So it's usually Delta Dental, Guardian, MetLife, and then most of the other carriers do have the built-in dental too.
Thank you.
Also, do all of the dental plans include Dr. Ellie?
Dr. Ellie is super nice. She accepts most dental plans that are PPO that I'm aware of. So I think you need to talk to the doctor first. If you're going to make a decision, talk to her first, and then she'll point you in the right direction which plan will work best for her office. I know there are a couple that are really good. There are some premier plans that do a good job covering the benefits there.
Cool. One other question for you. If somebody knows that they are going to have a health event coming up this year, would that be a good time to kind of take a look at their benefits or maybe see if there's some different options?
Yes, so that's one of the questions I usually ask early on when I'm interviewing the owners and the employees. What do you expect to happen this year? Because that helps in our decision to the benefits level. Do we want a platinum plan? Or are you going to have heart surgery? Okay, we probably need that platinum plan, PPO, so you can choose any doctor in the state or even in the country to get that heart surgery or brain surgery. So that's a really important question, because if they don't tell me or I don't ask and we get them the low cost bronze plan, then they're going to save money every month. But when they have that surgery, they're going to have an $8,000, $10,000 bill that they need to pay. Versus if you get the better plan, you pay a little bit more along the line as you make your premiums out of your paycheck. But when you have the surgery, it could be just $600.
And you don't want to be going and getting any budget surgeries.
Probably smarter to choose the doctors with great reviews and results.
Awesome.
Yeah.
Any other questions from you guys on the call?
I have one. Do you, this probably is a little outside of your scope, but do you have any advice on how to start the conversation with your employees? Let's say everyone's working from home, everyone's worried about their future. You want to make a change with their health insurance to save yourself and them money. How do you even start that conversation and have it go a positive direction?
Yeah, so I try to treat it as a win-win situation. So the conversation for the owner is, hey guys, everyone knows we're not working, so our income is down. What we want to do is lower our overhead costs so that the company saves money, everyone stays on board longer. And since no one's working, it's going to save the employees money as well. So we're going to look at some other options, and just be patient. If you get a questionnaire, turn it in as soon as you can. And I think that's a fair way to do it without saying we're cutting benefits. That's a harder conversation to have.
Mm-hmm. Yeah. Cool. Thank you.
That's a great way to position that too. We're not cutting benefits. We want to keep the benefits. So how do we do that in a way that still works for everybody?
Yeah, and that's one of the higher overhead costs for a business. It's payroll and benefits. We don't want to cut the payroll.
No. Right, Jacqueline? No, we're not, not cutting payroll. George, we're not cutting benefits. We're just going to be a little more creative and we're going to figure out how to make it keep working.
I meant the employee payroll, not the actual payroll processing cost.
Well, there's got to be employees on that payroll to get paid. So I've got you, Jacqueline. Well, hey guys, we are about at time. If you guys have more questions, we will stay on for a few more minutes. But I did want to pull up a slide for George's contact info. If you have more questions and you'd like to reach out to George directly to maybe kind of get some of those specific questions answered that might just pertain to you. And then also let you guys know that next week we are going to have Susan Claren from CMG Financial talking about forbearance, self-employed loans, and more. So if you already have a home loan and you're looking for some ways to save money, or if you're a business owner and you're trying to figure out how you could potentially buy a home, Susan always has really practical insights that are helpful. And she has personally helped me with some of mine. So in fact, I think we're in process right now. So I will keep talking to her as well. But we hope that you can join us again next week.